We kick off today with a hawkish signal from inside the Federal Reserve that's rattling rate cut expectations. Fed Governor Christopher Jefferson flagged a very resilient labor market while doubling down on inflation control, contradicting bets on mid-2024 rate cuts. With unemployment near 3.8% and wage growth at 3.9% year-over-year, the Fed fears a wage price spiral that keeps PCE well above the 2% target. Long-term treasuries and intermediate treasuries face selling pressure as two-year yields push higher, while the Nasdaq 100 and NVDA see multiple compression from higher discount rates. Key level to monitor is 10-year treasury resistance at 4.30%. If Jefferson's view spreads, Fed funds futures could reprice toward a 5.50% hold through the remainder of 2024. Higher for longer means trimming long-duration equities, collecting carry on two-year treasuries, and rotating into financials and energy. Then we'll turn to what's moving in corporate deal-making. Shifting gears now, geopolitical fire is moving currency markets in a big way today. DXY climbed to multi-week highs near 104.50 as U.S. military action against Iran triggered immediate safe haven demand. Geopolitical escalation forces capital out of risk assets and into the dollar. Markets price in uncertainty, not outcomes. Defense names like Lockheed Martin gain on geopolitical premium, while the S&P 500 faces pressure at the 600 level and long-term treasuries watches 4.25% on the 10-year. All eyes now on PCE. Consensus sees core at plus 0.2% monthly and 2.3% year-over-year. A hot print spikes 10-year yields toward 4.40%. Dollar and defensives hold geopolitical bids regardless of PCE, but that print decides whether rate cut odds move. Next up, we're tracking a major corporate shakeup. Shifting now to a geopolitical story that could reprice the entire energy complex overnight. Iran state Grupo Televisa SAB reports a draft agreement with the U.S. to reopen Hormuz, through which 21% of global crude flows. Since tensions escalated in April 2024, oil markets baked in a geopolitical risk premium. A credible deal strips that cushion out of crude prices immediately. Energy stocks face meaningful sell-off pressure. The energy sector hits the $80 support zone, while airlines like American Airlines and Delta Airlines rally on fuel cost relief. If W&T offshore breaks below $80, consensus shifts higher on deal probability. A confirmed deal could pull the 10-year yield from 4.2% down toward 3.9%. Watch crude's $80 level. A break lower signals the geopolitical risk premium is unwinding, and that's a meaningful gift to treasuries. Moving on, we've got a major corporate story rattling Wall Street right now. Shifting to geopolitics now, Trump just drew a hard line on Iran's nuclear stockpiles. Trump publicly opposed Russia or China acquiring Iran's highly enriched uranium, while pledging to keep the Strait of Hormuz open to all commerce. The stakes are enormous, roughly 21 million barrels per day, about 21% of world seaborne oil, transit the strait, making any disruption a global supply shock. Energy names the energy sector and oil ride the escalation premium, while defense contractors Lockheed Martin, RTX, and Northrop Grumman rally on any military confrontation probability rising. Watch W&T offshore crude at $75 per barrel support. A break lower signals de-escalation confidence. Gold above $2,150 flips the script to full risk-off mode. Trump's dual message, hardline on uranium, open on Hormuz, means any military escalation is a tactical long in Lockheed Martin and Northrop Grumman, short in equities. Moving on, our next story hits even closer to Wall Street's wallet. Shifting now to the Middle East, where a major digital blackout has finally lifted. Iran restored internet access October 9th after an 88-day shutdown affecting roughly 88 million citizens. The blackout, triggered by anti-government protests, caused an estimated $1.2 billion in economic losses, a severe self-inflicted wound. Energy names like the energy sector and ConocoPhillips face risk premium compression. Defense contractors Lockheed Martin, RTX, and Northrop Grumman could lose regional conflict tailwinds. Key trigger is whether internet stays online beyond 30 days. Brent crude faces resistance at $85 per barrel if unrest reignites. Don't unwind Middle East hedges yet. 30-day internet stability is the threshold before repositioning Lockheed Martin short or trimming gold. Moving on, our next story hits even closer to home for equity investors. Shifting now to the American consumer, whose confidence just took a notable hit in May. The University of Michigan Consumer Sentiment Index dropped to 71.6 in May, missing the 74.5 consensus and falling sharply from April's 77.2. The real driver is stagflation fear. U.S.-Iran escalation risk is pushing crude toward $90 a barrel and gasoline toward $3.50 nationally, crushing purchasing power confidence. Defensives win here. Long-term treasuries catches safe haven flows. Gold eyes $2,450 resistance. Lockheed Martin and defense names gain on geopolitical premium, while consumer discretionary faces real selling pressure. Key levels. The S&P 500 holds 5,300 support or risks 5,150. The 10-year yield at 4.20% watches a break of 3.95%. The June 12th CPI print is the next major confirmation catalyst. Bottom line, recession risk is rising and stagflation fears are real. Rotate into treasuries, gold, and defense now while trimming discretionary. Next up, we're watching a major move in energy markets. Shifting now to the macro event every trader is watching. Thursday's critical inflation print. The Fed's preferred gauge drops at 8:30 Eastern Time. Consensus sees headline PCE at 2.7% versus March's 2.5%, with core steady at 2.8%. Core PCE, stripping out food and energy, is the Fed's true confidence benchmark toward its 2% target. Any acceleration kills the disinflation narrative. A beat above consensus crushes long-term treasuries and TLH, pressures NVIDIA and Microsoft on multiple compression, and drops June cut odds below 30%. Monitor the 10-year yield. 4.25% is resistance, 4.10% is support. The Nasdaq 100 and long-term treasuries move inversely. June cut probability sits at 48% right now. A subconsensus print is the green light for long-duration plays. A beat forces a Fed hold. Moving on, our next story carries even higher stakes for global markets. And rounding out today's coverage, geopolitical risk is back in the driver's seat for crude markets. W&T offshore crude surged 3% Thursday after Iran struck a U.S. airbase, retaliating against fresh American military operations in the region. The Strait of Hormuz carries roughly 21 million barrels per day. Any disruption there tightens global supply immediately and structurally. Energy names the energy sector, Chevron, and ConocoPhillips gain on price support, while airlines American Airlines, United Airlines, and Delta Airlines slide on rising jet fuel costs. Key levels. W&T offshore faces $82 immediate resistance, then $85 psychological barrier. The 10-year yield target sits near 4.15% on safe haven flows. Maintain long energy and defense exposure. A straight closure headline is the single trigger that sends W&T offshore above $85 and risk assets sharply lower. Hit subscribe and tap the bell so you never miss our daily market deep dives. We break down every move that matters.